Hey traders, let's get into the ATR study. You can apply this to pretty much any major broker platform or charting software that you use. And the ATR stands for average true range. It will usually default on your broker platform for a 14-day and start using it on the daily chart. Before we get started, make sure you hit that subscribe, hit that thumbs up for like, and leave a comment with a question or ticker that you are trading. So let's dive into why use the ATR in trading and what stocks have a high ATR. Let's first dive into why. The ATR is going to give you the high to the low of how the stock, how much it's been moving over the last 14 days. So for example, let's say the ATR is $5. If it is a $100 stock, you can expect that stock to move about $5 from high to low a day. Therefore, let's say the stock jumps to 105. You could see the stock pull back all the way to 100. Or if the stock declines from 100 to 95, you can expect an average move of that $5 for a possible rally back to 100. Why I like using stocks with a high ATR is they make fantastic trading vehicles. When I mean fantastic stocks with a high ATR, I'm talking names like Tesla, Nvidia, AMD, Netflix, Facebook, or now Meta, Google, Amazon. These high-flying stocks with high ATRs, they make it very attractive for day trading and short-term option traders like myself. Also, when you start having a greater than expected market makers move, that's often what we refer to in the options market when trading short-term options. When you have a move greater than the stock's ATR, the market makers start to panic, and that's how you can really make some money trading those short-term weekly options. We're going to dive down to the screens and break down the ATR on one of my favorite stocks to trade, AMD, so let's dive to it. So let's go show how the ATR works and how to use it on your platform. So this is TD Ameritrade Thinkorswim, and all I'm going to do is click here on the little beacon icon and click ATR, type it in, double click. It will default to a 14-day as a lower study, which is totally fine. Click apply, there we go. The stock I'm looking at is AMD, very popular name. And you can see when using the ATR, when we start to see the range expansion in the ATR, we start seeing large moves in the underlying stock. So let's dive into it here, and we see the ATR at AMD is about $4.50, $4.52. So therefore, we can be expecting the high to low of the day in AMD should be right around $4.50. So let's look at it yesterday. We'll pull it up here on a 5-minute chart, and let's look at the high yesterday, which is right here. So we're looking at right about 139.5, and the low is about 135.5. So we do the math, that's about $4, pretty much right in line with the ATR. If we look at it from the prior days here, we see the ATR here on the high 143.47, and the low was 138.56. So we're looking pretty much about $5. So you can see the ATR has actually been expanding as we have price expand here to the upside. Now what you can look, and one of my favorite strategies, is seen when the ATR moves greater than expected, you have a follow through or a day two in that direction. So here we have the ATR expanding. We see we've been pretty range bound in ticker AMD for quite some time here. We're looking again at a daily chart. You can see we've been pretty sideways, the ATR pretty relatively flat. We start getting a big move here. It's a big red candle, but you see the ATR moving higher. And look at this follow through. The next day, the stock rallies from about 120 to about 127.5. So that's about a $7.5 move, while the ATR was only around about $4. So we almost doubled that ATR, and then look at the expansion that we had in price to the upside following that. Something to take a look at, especially if you see a big move in the stock and you're saying, hey, I'm a little late. Can we have some follow through to the upside? look for that day 2 of the ATR expansion. Why is that? Well, because the market makers are pricing the options via implied volatility. When you have implied volatility expand, the market makers that sold options, they start to panic. Therefore, they jack the price of the volatility. And that's how you make money in the stock market trading options, is you have greater than market makers expected move when you're buying short-term options, especially.